Yeah, morning traders, welcome to New Trading Week Ahead. If we look back at what we've been seeing, there's been green on screen in equity markets. We are seeing a bit of consolidation. If we have a look at the weekly charts or daily charts in the S&P, just below that sort of 45.20 level, we're going to see an upside catalyst to sort of push us through there and continue on in this move we've been seeing. In the Nasdaq, we're sort of consolidating just below 16,000. Of course, we're going to be watching those earnings from Nvidia tomorrow after market. The market is expecting some big moves from Nvidia. The implied move from the options pricing is about 7% up or down. So, the bulls will want to see that taking out that $500 level, which has sort of been containing the price about 6 or 7 times over the last few months. And if you get a break through that, then obviously that could take the Nasdaq above 16,000 because it's part of that magnificent 7. And then you've got the Dow just sort of prime below 35,000. Where we are seeing the outperformances in those European equity markets, certainly in the DAX, in the IBEX, and also Euro stocks. They've been in very, very strong momentum moves, and swing traders, we're looking to just massage kind of entry orders to get long in any kind of pullbacks there. Where we've seen the underperformance, though, is in the Chinese equity markets, Hong Kong equity markets. And we were expecting to see a little bit of upside in those markets, but that hasn't been the case. We're pretty underwhelmed by the price action we've been seeing there. FX markets, well, it's all been last week about that US dollar selling. Seriously, that CPI number really resonating. It sort of swung the distribution of rates to one which is now the market saying we're not even really debating higher for longer anymore. This is about when the first rate cuts comes and to the extent that we're going to see rate cuts coming through in 2024, despite what's happening in the election, other factors. The market is swung to believe that we're going to see fairly aggressive rate cuts, not just in the US, but across G10 more broadly. If we have a look at the dollar index last week, it was down 1.9%. It's the lowest level since September. We're trading through that 100-day moving average, and we lost ground last week against all G10 currencies and EM currencies bar the Colombian peso. If we have a look at our market environment for this week, and I was look at the implied volatility in markets, it is very, very low across asset classes at the moment. The 1 week implied volatility in euro dollar is 5.7%, which is actually the first percentile of the 12-month range, which gives you about a 73 pip move up or down in euro dollar over the week. Cable's trading at 6.7%, 1 week vols, that's the 4th percentile, gives you about a 102 pip move. Aussie dollar, 67 pip move. You go into gold, 1 week implied vol 9.85%, which is giving you a sort of $25 move up or down. And the VIX trading sub 14% gives you a sort of 2% move in the S&P over the coming week as well. Now, if we have a look at the week, I think if you're looking at sort of big factors, we're going to keep our eyes very firmly on oil. Next weekend, we do have the OPEC meeting. There's a lot of speculation that we could see further output cuts coming through as a result of this crude weakness we've been seeing. That does give us some gapping risk as we go into the weeks. Obviously, watching your crude exposure as we go through there. Can we see a bit of upside into $80? Later in the week, we do have Thanksgiving in the US. Of course, that's going to be a big event in the sense that we're going to see cash markets for both bonds and equities having a sort of offline for a day and a half or so. Futures will be trading partially, but obviously expect light volumes through there. And also in the UK, sort of on the political side, we're going to have the UK autumn statement. Probably going to get some headlines, but I'm not expecting it necessarily to be a market event in terms of what we're seeing in cable. And you're seeing that in the implied vol structure as well. The market's not too put out by this. Now, if we have a look at the event risk in terms of the data flow this week, if we go straight into the US, you can have a look at market pricing and you can have a look across the boards and you can see that really no hikes are now being priced in at all. It's really a question of when rate cuts are coming through, and you can see the door being open for May where we've got 19 basis points of cuts being priced in, or a 77% chance there. You go to November and we've got 82 basis points of cuts, so over 3 rate cuts being priced in by that time. If you go to SOFR spreads, you can see for Z3, Z4, about 100 basis points of cuts playing through there. But for the week that will be, we've got leading indicators. The market's expecting about 70 basis point contraction. Existing home sales, FOMC minutes, initial claims, durable goods, which are expected to drop 3.2%. They could be quite interesting because that will feed into the GDP nowcast models for Q4. We've got the S&P global manufacturing numbers expected at 49.9. That's a slight slowdown from 50 in the prior month. And also services at 50.4. So I think if we got services below 50 on that boom bust level, that could continue to weigh on the US dollar. If we have a look at European rates, again, this is where we're expecting some fairly aggressive rate cuts in terms of market pricing. You can see the first cut really being priced in for April, where we've got 20 basis points there, or a 79% chance of a rate cut by that time. But then, go to September and out to 67 basis points of cuts being priced in by that time as well. So, the ECB expected to start that easing cycle a bit sooner and reasonably aggressively. We do have a number of ECB speakers playing through this week. So again, will they be pushed back on that situation? And on Thursday, we get the manufacturing and services PMI numbers coming through. So I think that could be quite influential. If you have a look at here, expecting a little bit of improvement playing through. That service number, I think, could be very, very important indeed. In the UK, well, you know, that autumn statement, I don't expect necessarily to cause too many gyrations in the pound, which is seeing a bit of upside at the moment. I'm watching that euro sterling cross because 87.60, if we get a break through that level in the euro strength, that could be a nice momentum move to play through. But in terms of the UK, again, you know, public finances, you know, probably won't influence too much, but it's again going to be that PMI numbers, both from manufacturing and also services. And I think the services number could really play into what we've been seeing there. But certainly rate expectations. If we have a look in the UK, no real rate hikes being played in. The market is saying that, yeah, again, this is a question of when they cut and by what kind of extent. If we have a look at market pricing, you know, the first rate cuts would be open the door for May, where it's about a 50-50 chance there in June. Yeah, we're pricing a full rate cut coming through in that meeting as well. Now in Australia, we will be watching the RBA minutes. I'm not expecting them to cause too much gyrations. I think actually probably better off listening to conversations from RBA Governor Bullock. She's going to be speaking a couple of times, and then Schwartz as well, I think is going to be quite interesting playing through now. So not a huge amount of data, but if we have a look at market pricing in Australia, you know, this is one where, you know, nothing's really being priced in. The market's still a bit unsure. We need new data to sort of give us the understanding about what's happening. And then we've got Canada. We've got CPI numbers later in the week. The market's expecting fairly aggressive rate cuts coming from Canada. So watch that Canadian dollar exposure. But, you know, that CPI number on the headline expected to drop from 3.8 to 3.1% and core at 3.6%. So there's plenty out there. Can we see a continuation of this equity rally we've been seeing? Will the dollar continue to be shunned? And big talking point, which we're going to explore a lot more recent in further videos, is the idea about the extent of rate cuts which are being priced in across all markets except Australia and certainly Japan. So another big week ahead. Trade it with Pepperstone.